Hi everyone, this is Dale Anderson from Fabrik Invest. I hope you're well. Today I wanted to get into our 2023 UK property market predictions, what to expect. So, the UK property market is one of the most important factors in the country's economy. Predicting how it will move in the future will be challenging. With that said, as we look to 2023, there's several key trends and predictions will likely shape the UK property market over the next few years. So what we do, we want to help investors with expert insights into what will happen and keep you updated on trends and the latest news on property. Please subscribe to our channel, give us a like and a follow for future news. So what will happen to the house prices in 2023? It's no secret that the UK property market has experienced a roller coaster of a ride over the past few years. 2023 is set to be an interesting one for house prices. So what can we expect? Experts have predicted house prices will likely stagnate or drop in some areas in 2023. It's not a one-size-fits-all for each market. It's likely that regional variations will still exist across the UK. For example, each region has different supply and demand issues, meaning there isn't a blanket response across the housing market. With rising interest rates, many homeowners are locked in good fixed-rate deals and will not want to sell. This will reduce the amount of housing for sale, which could underpin housing prices throughout the course of the year. Also, there's a demand for green homes and energy-efficient buildings, which will likely increase in 2023 as buyers become increasingly aware of the environmental impact and rising cost of living. This means green homes could command higher prices in areas worth considering, homes that are energy efficient, primarily in the new build sector. So when will rents increase in 2023 is the next question. The UK property market is always a hot topic, and as we approach 2023, it's only natural to speculate about what's going to lie ahead. It's no secret in the pandemic, it had a significant impact on the market, with some areas seeing a decrease in prices, other regions booming due to increased demand for homes. Unfortunately, what's going on in the market, this will lead to an increase in rental prices due to the shortage of rental homes, but mortgage rates are also on the rise to keep track of inflation. It can be difficult for first-time buyers to secure a loan at an affordable rate. As such, renting can become an attractive option, even if it means selling out more money each month. This will drive up demand. Subsequently, the cost of renting in the UK will go up. The good news, increasing rental prices should come with better quality housing options. With so many people looking to rent, landlords are likely to invest in properties in order to ensure that they stand out from the competition and remain attractive to potential tenants. So ultimately, the UK property market in 2023 will be interesting and unpredictable. There are likely going to be many changes as people adjust to rising mortgage rates and increased rent costs. According to HomeLet's rental index, the average rent in the UK is now up £1,175, up 11.1% from 12 months ago and 3% from last month's average. Interestingly, every region in the UK continues to see annual growth, meaning there's a real demand for rental property across the country. The next thing, portfolio diversification. Diversifying your portfolio is a smart investment strategy to protect you from risks and uncertainties. Invest in off-plan property, and put down 20% and the balance at completion, and by then interest rates may have normalized, but who knows. So buying off-plan is ideal for investors who want to spread the cost of buying throughout construction. You can also look at niche sectors such as purpose-built student accommodation, as well as holiday accommodation, luxury holiday retreat accommodation, and also things such as hotel room or serviced accommodation. Investments which are alternative property investments in the current market. As the UK student population continues to grow and students return to university after the pandemic, there's a growth in the long-term rental yields and minimal maintenance costs. Investors need to diversify their portfolio and look at different UK property markets. Incorporation tax increase. With the UK government announcing a rise in corporation tax to 25% from April 2023, investors should look at running a property business. You may face increased costs, so you need to consider this. The move could mean that it may become more expensive to buy through a limited company as businesses are set to pay tax on their profits at a higher rate. The increase comes as part of the government's plan to raise $9 billion in extra taxes from businesses over the next 4 years and encourage businesses to bring back jobs and investment to the UK. However, it is still important to note there's plenty of benefits buying through a limited company, with significant property portfolios will likely continue to use companies for limited liability and associated tax benefits. When planning for property investments, it's important to consider all the costs associated with the purchase, such as tax, legal fees. It's also worth considering how long you intend to hold assets before making a purchase decision. The tax rate due to rise in 2023, April this year. Any purchases made after this date should consider the potential cost of the increase. So, reduction in capital gains tax allowance. One of the key changes forecast to occur is a reduction in capital gains tax allowance. The current CGT allowance is $12,300 per person, meaning you are taxed on any gain above this amount. However, the government has announced plans to reduce the allowance to £6,000 from April 2023. This means that the gains on the property become taxable much earlier than they currently are, with investors having to pay taxes on smaller gains. This could result in many property owners looking to offload their assets as soon as possible to make the most of the higher rates before it decreases. So for those looking to make the most of the investments, now could be a good time to sell up and reinvest. This could help ensure maximum profit on your current property, potential reduction in your CGT allowances in 2023. Also, take a long-term approach to property. The outlook for the UK property market over the next 5 years does remain positive, according to major players in the industry, such as Savills, JLL. They predict that the market will remain stable over the course of the next 5 years, with price increases at a steady rate. So good news for investors who have the opportunity to benefit from the current market conditions by buying off plan or completed secondary properties, distressed and below market value deals. So there's potential price decreases in the short term, potentially due to inflation rates and mortgages, but the mid to long term prospects are still strong. This means investors can benefit from any increase in value as well over construction, and given the strong market projections, now is an ideal time to invest in off-plan properties. Investing in property can bring great rewards for those who are willing to take a long-term approach and a mid to long-term view. With the right guidance, advice, investors can rest assured the investments will be in good hands. If you want to book a meeting, discuss what's happening and some of our new exclusive launches coming up, click the link below and we'll keep you updated. Have a blessed and happy new year. Thanks.